Good morning. Welcome to Daily Rates Live with the Mortgage Calculator. Today we're going to go through some live mortgage rates and then we're going to be talking about HELOC Combo Loans. So give us just a minute here to go live on all the different platforms and then we will go ahead and get it started. Feel free to drop a comment there in the chat as you tune in. We appreciate it. Hope everyone's having a great week so far. We'll get into some live rates here in just a moment. All right, it looks like we are live on all the different platforms, so we'll go ahead and get started. Keep dropping comments there in the chat. I see some coming in, definitely appreciate it. You can also drop comments, you can drop questions in the chat as we go through our deep dive topic here later as well, but we'll go ahead and get started. So welcome everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender, and what we do every morning at 11 a.m. Eastern on this show is go through our actual live mortgage rates for the day, and then we do a deep dive into a different loan topic. Today's topic is going to be HELOC Combo Loans. So our sales manager, Jose, with 28 years of experience, will break that down for us here shortly. But before we do that, we'll do what we do every morning, which is pull up the rates. So Nick, if you're ready, let's go ahead and pull up the pricing tool and see what the rates are looking like this morning.
All right, thank you, sir. Go ahead and switch my screen. We will check it out. A lot of movement yesterday in the markets, and today looks like there's some movement as well. So it'll be interesting to see here. This is our pricing tool for our team of mortgage professionals. This will show us the general rates and APR for today, this morning. As I mentioned yesterday, there was a lot of movement, so we saw a lot of volatility. And this morning, we're seeing some downward momentum, so hopefully that starts picking up. It is just after 11 a.m. Eastern, so most of our programs have live rates for this morning. If you'd like a full breakdown of all the itemized fees that go into the APR, please get with one of our team members so they can give you a full itemized loan estimate. Now for the demo, as we do every day, we'll set up a basic scenario so we can compare across the programs. We'll set up a $400,000 loan amount. We'll set the LTV to 80% loan, 20% down payment. And we'll ask the computer to find the lowest rates we can offer for conforming conventional. Compare that with FHA, which is usually the second best option for most customers. And then we'll go into our expanded guidelines, also known as non-QM, where we have over 5,000 options beyond the standard here. Excuse me. We also offer VA and USDA. VA is only for eligible vets and active service members. If you are, just let us know. We can quote that, no problem. And USDA is only for eligible properties. If you do happen to be looking in those areas, just let us know. We can quote it in a couple clicks. We'll start with conforming conventional. We'll do a purchase, 30-year fixed loan, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated credit score here of 760 and an estimated debt-to-income ratio here of 40%. So with these settings, let's see if the market's moving yet today. And not much movement. Looks like these are some of the rates from yesterday when the 10 years were peaking, all the treasuries were peaking here. So 6.375 rate, 2.5 discount points for our final APR of 6.672. So we saw that in the afternoon yesterday. I am guessing this will start to go down today as we are seeing some more relaxation on those yields. So go ahead and check those out later today. We should see some downward momentum. Now, for any reason our customer doesn't qualify for conventional, the next option we typically want to compare, can't get the slider there, is an FHA option. So we'll set up the same scenario, and this time we'll select FHA, which allows more leniency on credit issues, as well as higher debt-to-income ratio, but we're going to keep everything identical so we can compare apples to apples here and compare the APR. Excuse me. So for today, FHA went up a little bit as well. So 5.625 rate, 2.25 discount points and cost, puts the final APR at 6.545. So in this case, FHA didn't quite go up as much as conventional. It's a slight bit cheaper here for our customers that qualify for both. And remember, this APR does include the upfront and yearly mortgage insurance for FHA. So this final APR is the final price here for our customers that must use it. Definitely some good changes there. And our customers that qualify for both, don't overlook FHA. Some days it is a tad cheaper. Now, where we love to specialize is if unfortunately our customer doesn't qualify for FHA or conventional or standard programs. Many other banks or lenders have to tell that customer they do not qualify. But that's where we love to present our 5,000 alternative options here under non-QM. So we can say yes to our customers here. When we select this option, everything will stay the same. Oh, I put that the wrong setting there. Everything will stay the same, but we have a new option pop up for income type. So when we choose non-QM, we can change the income. Full doc is what we use for conventional and FHA. That's 2 years of tax returns. So if we don't qualify using 2 years of tax returns, we'll use one of these alternatives. We have asset-related programs, business bank statement programs. The investor programs are just for investment properties. We'll show that in a second. Personal bank statement 12-month is the one we use for the demo. That's the most popular request. We also have RSU, stated income, VOE, 1099, P&L, and no income CDFI. But this 12-month personal bank statement is the most popular request, especially for our self-employed borrowers. Many times our self-employed borrowers, when they submit tax returns, may have various write-offs and may not qualify at all, or just may need a little more income. Either way, we can solve that problem. No tax returns at all, just their last 12 bank statements to determine a debt-to-income ratio, in this example here, of 40% using just the cash in the bank. So most of our self-employed borrowers will qualify where they would otherwise not. So let's check out the bank statement options this morning. All right, these went down a touch as well. So as I mentioned last week, we see the non-QM usually takes about a week to start moving as the markets move. Unfortunately, the markets went back up yesterday, so these probably would have went much lower if the markets were continuing downward. But the best option here at the top, 7% rate for 2.225 discount points. Puts the final APR at 7.390, which is a touch lower than it has been. And for our customers that need to use this, it's actually within about a half a point today to use a bank statement program compared to conventional. So our customers have absolutely amazing options here. And there's tons of flexibility as well. If you scroll down, there's hundreds of variations. Some of these may allow different credit events, bankruptcies, foreclosures that would otherwise cause our customers to not qualify. And some of these may allow different ways to calculate the income. So please get with our team. There's hundreds and hundreds of variations under each program here to find the best one. And for our final two demos, we always want to do live pricing for investment properties. So investors, first-time investors, seasoned investors, we love to present all the options we have. So we'll set up the same scenario for investment property, 80% loan, 20% down payment. And we'll look for the lowest rates we can offer for conforming conventional. And then we'll compare that to our non-QM expanded guideline options. Remember, the government programs, FHA, VA, USDA, do not work for investments. So we'll stick with these two. We'll start with conforming conventional. Everything's going to stay the same as all our other demos. We've only changed the occupancy to investment property. So for those investors wanting to go conventional, let's check out the rates this morning. And as usual, when the rates do get volatile, we have our portfolio option that seems to creep up to the top when the rates start to get a little bit volatile. So our portfolio option is not a true conventional option. It does follow the same guidelines. However, this is one of our partners is going to not sell the loan to Freddie Mac or Fannie Mae. So it's not an actual Freddie Mac or Fannie Mae loan. But today it is the cheapest option for 6.875 rate, 3.25 discount points and costs. Puts the final APR at 7.264. And our top true conventional option here, 6.99 rate, 3.375 discount points. Puts the final APR at 7.396. So good options for our customers that qualify for full doc and want to use these. And always keep an eyeball here on this portfolio option as well, because it does eliminate some of the loan level price adjustments that Freddie Mac and Fannie Mae have added to those investment property programs. However, regardless, I would recommend all of our customers check out our non-QM options. So for the final demo, we'll put together the same quote, 80% loan to value for investment property. And this time we'll select our expanded guidelines, also known as non-QM. So a few new options pop up here as usual. First, we need to select the income type. which our most popular income type by far for investment properties is our DSCR program because it doesn't require any income or employment or documentation on that from our borrower. We simply use the estimated rental income from the appraisal to determine a DSCR value. It stands for debt service coverage ratio. If the estimated rents from the appraisal can cover the expenses, the PITIA of the mortgage, that's a ratio of 1 or higher, aka the property cash flows monthly. You can have options for under 1, where the property may not quite cash flow. For the demo, we put 1.5 so we can see all the programs pop up. And finally, prepayment penalty is standard. 3 years is what we use for the example here. That is standard for these programs. There are options for no prepay that will cost more and limit the programs. There are also some options for 5 years, which will limit what shows up, but does save our customers that hold properties some money. 3 years is standard though. That's what we'll use for the demo so we can see all the most common options pop up. So let's check out the DSCR rates this morning. Woo! Even lower than it has been. So DSCR, again, when the non-QM reacts, it does take a little bit. So we're seeing some downward trend here, 6.875 rate. First time we've had that for 3.15 discount points at cost, puts the final APR at 7.359. So notice our actual DSCR is actually beating conventional, not quite beating that portfolio option that we had there, which beats it by just a hair. But I would say 100% of investors, when they compare a conventional full doc or even the portfolio full doc option to a DSCR, will choose the DSCR, especially when it is the same price. So great options here for DSCR, absolutely smoking pricing. And there's tons of flexibility here. You see some of these other options, hundreds of variations. Some of these options at a little bit higher rates and costs may allow bankruptcies, foreclosures, other issues to get by. And some of these may allow different ways to calculate the income. Short-term rental is a very popular request. So some of these programs at a little bit higher rates and costs may allow us to use different income calculations. So please get with our team to find the best options. Now let me switch my screen again and we'll get into today's example. Which is our HELOC Combo Loan. So we've done some episodes recently on second mortgages, done some episodes recently on HELOCs and instant HELOCs. This is where we're going to put it all together, a HELOC combo. We always talk about kind of our blended rate and some of the other things that come along with that. A HELOC combo is where we actually put the HELOC second with a first at the same time. There's a few reasons why we would do this. Jose is going to go into some specific examples. This is a tool in our tool belt, right? We always have the HELOCs. We always have regular mortgages. Putting them together is a specific tool that we're going to use for specific situations. So hopefully that prefaces it there for you, Jose. Why don't you let us know why we would use this first, and then let's go check out some rates if you can.
All right. Good morning, everybody. Thank you for joining us for Daily Rates Live with the Mortgage Calculator. Jose Gonzalez, happy to be with you today. Great day when rates are going down. That is the trend, right? So let's everybody take advantage of the momentum. And the HELOC combo loans are definitely part of the action because as those rates go down, we're seeing the rates on the HELOCs improve as well. So we do quite a bit of loans in Florida. I mean, that's not the only place we do loans, but obviously we are headquartered in Florida. Florida is the hottest market in the country. Miami has the top capital appreciation in the country, so definitely a lot of action. But if you are in the market down here as a loan officer or as a purchaser, you will notice there's a challenge with the associations not having the required 10% reserve for those conforming loans, right? You got to have at least 10% in reserves for the project to be able to do a low down payment loan. Other than that, you would have to be doing 25% down payment for a limited review condo loan in Florida. Rest of the country is 10% for limited review condo loans. Florida is 25%. You know, we have just that many more condos, right? So the HELOC combo loan allows us to combine the limited review first loan at 75% LTV with the HELOC for 15% for a CLTV of 90%, right? So that's one of the great things we can do with the HELOC combo. And the other thing we can do with the HELOC combo is we can buy, or the borrower can finance a deal with 5% down on the purchase of his $1 million home, right? Normally that would require a jumbo loan if you're going over the conforming loan limits. South Florida happens to be $726,200. So if the borrower was buying that $1 million property, which seems like most of them, that's what they cost nowadays, they would definitely have to come in with a minimum of 10% down plus pay higher interest rates. So we can do a HELOC combo to the Fannie Mae limit of $726,200, combine that with a HELOC, right? And the borrower could come in with 5% down. And then obviously we would want them to get on an accelerated repayment plan to pay that HELOC down, because the beautiful thing about the HELOC is, as an open-ended mortgage, you pay interest on what you owe, right? It's not a set amortization. So it's definitely not in your best interest just to pay interest only, but you really would want to pay that down, and then your interest expense will decrease with each payment, right? So that's another benefit of these using HELOCs. And another benefit of the HELOCs, for example, is you want to do a cash out to a 95% LTV, right? But you know that the cash out limit on the conforming loans is 80%. Well, you can do a HELOC combo, do a rate and term on your first and cash out on the HELOC, right? Whether you need all the cash now or you just want to get the HELOC, draw part of it out and then draw the other part out as you need it. So you only pay interest on what you owe. So 3 good examples of how we can use the HELOC. So let me show them to you. Here are the examples that I have on all of these parameters that we're talking about. So our first one here, and this one is a super popular combination for Florida, because like I mentioned, most of our condos here are not collecting adequate reserves. Some are 3%, 5%, some are 0%. So you're just not going to be able to do that 5% down loan in Florida most of the time. I'm not saying all of the time, but most of the time, especially in South Florida. So we combine a first mortgage of 75% LTV, line of credit of 15% of the amount, so that we have a CLTV of 90%. And added benefit, right? The frosting on the cake here is no mortgage insurance, right? So in some of these cases, at a 95% LTV on some of these prices, your mortgage insurance could be a couple $100, $150, $180 with good credit, and substantially higher than that if your credit score is on the lower side. So no PMI. So that definitely helps out. So here you're looking at 7.5% as your lowest cost option and 6.75% as your lowest rate option. And then if we scroll down here to the bottom of our quote, you will see our HELOC is at 12%, which is not bad. A couple months ago, we were looking at 14, 15% on these. So the rates are dropping, right? So this is our 90% CLTV condo killer loan. And now we have another good workaround here is borrower doesn't want to pay mortgage insurance. What do? Well, we get an 80% LTV first mortgage, right? That's the maximum for no mortgage insurance on a conventional loan. And in this case, we're going to take it to the max, right? This 95% CLTV purchase, right? So they're giving their 5% down. They're getting 15% of the purchase is a HELOC, and 80% is the first loan, no mortgage insurance. And again, you would be consulting your borrower to try to get on an accelerated repayment plan on the HELOC, maybe make a payment every 2 weeks on the HELOC. There's a lot of strategies out there that really allow you to reduce your interest expense. Remember, it's the compounding of the interest that really gets you in these situations. So you get on that accelerated repayment plan and you will be paying it down quicker and reducing your interest expense substantially. Excuse me. So in this case, again, 7.5% is your lowest cost option. 6.875 is your lowest rate option. And now we have our jumbo killer HELOC combo, right? So this is the one I was mentioning. Buy that $1 million property with only 5% down. Yep, that's not a typo. Right? Perfect workaround for buying your property with a conventional loan instead of a jumbo loan with 5% down. You get that conventional conforming limit first mortgage with conventional conforming rates and automated underwriting. Don't forget about the streamlining of automated underwriting for our conventional loans, which is another big workaround there. You want that 1 year findings or whatever you want. Well, here you go. But you do have to recall, I want to take a step back. When you are doing the combo loan, you do have to be aware that the HELOC is going to have a separate set of underwriting guidelines. So they may not accept your underwriting findings on that first, and you may have to jump through a couple extra hoops of fire for the HELOC, which may require the 2 years for your borrower income instead of a 1 year finding. So here we got 7.49 with a little bit of a lender credit. Look at that. They like those big loans. And you can buy that down all the way to 6.49. That's pretty amazing rates. And then if we go down here to our HELOC, it is a little bit higher because we're taking it to 95% CLTV instead of 90. So there's a 0.375% higher interest rate. So our $225,000 draw there, 2320 is our interest only expense there. So very good options here. And now our last option, this is the one that we love. This one was super popular for us at the onset of the pandemic when we initially rolled out this combo product of the HELOC Combo Rate and Term Refi combining with the HELOC. So in essence, this is like a hybrid type transaction. Part of the transaction is rate and term on the first, so you get that rate and term pricing. Now, in this case, I used the same setup that I had on my jumbo purchase, so we're only at 72.5% at the maximum conforming loan limit here. But just imagine this scenario with a $600,000 price. You're taking the rate and term to 90% LTV because it's a rate and term, and then you're getting a little added bonus of 5% extra LTV there from a HELOC. So in essence, making that a hybrid transaction with part of it being rate and term and the other part of it being cash out. So you're not limited by the cash out LTV, which is maximum 80% on a 1 unit property primary, right? So big difference there if you're trying to get that maximum CLTV and not pay the added costs. So here you're looking at 7.49 at par and 6.49 as your lowest rate option to get your rate and term on the first and to get plenty of dough out on that HELOC. And obviously remember the accelerated repayment plan on that HELOC, plus you only pay on what you owe. So if you don't draw out the full 225,000, you don't pay the 2,200 plus every month. So these are four very good examples here where you can combine a HELOC in different ways to gain an edge on the competition and further serve the needs of your borrower.
What's the rate on that HELOC, Jose? For the cash out? There you go. Same.
12.375,
Gotcha.
225,000 bucks.
All right. Cool. Great options there. As Jose said, another tool in our tool belt as a loan officer to accomplish those certain goals. So I don't see any actual questions. So I think we can go ahead and wrap it up then. We appreciate everybody tuning in. Remember, 11 a.m. Eastern every weekday we do this where we go through the live rates and then do a deep dive into a different topic. So we'll have a new topic tomorrow. Thank you everyone for tuning in. Thank you, Nick. Thank you, Jose. We'll see you all tomorrow, 11 a.m. Eastern for the next episode of Daily Rates Live with the Mortgage Calculator.
Thanks, everybody.
Have a great day.